Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about a very interesting sector, a very common sector that I'm always bullish on, the consumer sector, which is an evergreen sector. I picked the five strongest stocks. They might not be the ones you would be looking at because they are all nearly large caps, but I believe these five strong stocks could go a long way in making wealth for you over a 7-8 year period. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about the sector, here's a small request that kindly support me on Patreon. And once you do that, it will help me grow the channel, it will help you also ask me questions on a daily basis there. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of, you can say, articles and podcasts that I put on Patreon for every day, virtually every day. And for direct queries on multiple stocks, you can directly email me. So the criteria for this is, and first of all, I want to tell you that these five stocks are not small caps or really multi-bagger type of stocks, but these are stocks for those who want stable, good 25% returns, because these stocks have corrected. At least four of these five stocks have corrected and is in correction mode, and the correction may come in more in the next 2 months. So we need to keep an eye on these like an eagle, and do our research and just sit for the prices to come in to buy into the stocks. So that is why I picked these stocks. They can give you 20 to 30% return year on year over 6 7 8 years. They have done that over the last 40 50 years. They are pedigree stocks, strong institutional holdings, and solid return ratios. So absolutely no qualms about these stocks, absolutely no worries about these stocks. It is just that people are afraid of buying it because they think that they are expensive and they become more expensive. So the allocations in these stocks would be put 20% in each stock, probably whatever amount you're putting. So a complete portfolio, if you are having of say 1 lakh rupees, then put 20,000 in each of these five stocks and buy it over a period of 20 months. So you buy for 1,000 rupees in each month, or 1% in each month, and just complete your buying over a period of time and not immediately. Or if you feel like you can, then you can buy immediately also. You won't lose a lot. Eventually in 6 to 8 years, these stocks could grow at 25 to 30% CAGR. Keep a 30-35% stop loss, but in these stocks, in these cases, the stocks should do and perform well. So this is my first pick, and yes, no surprises. Hindustan Unilever. Everybody knows about the company. Leader in the Indian FMCG segment, around 4.5 5 lakh crore market cap. Gaining market share. See, basically, why I picked all these five stocks is the number one reason is the market share factor. Because in difficult circumstances, like we had the demonetization issue, and there was a lot of issue with supply chain, etc., these companies stood out and gained more market share. After 2016, 4 years later, we have a same scenario 3.5 years later, and I believe HUL will gain even more market share as smaller players, unorganized sector, and players in the biscuits, cake segments, in the personal care segments who are making products. Small businesses will go out of business because of the problems that they are facing with regard to funding. And companies which are debt free, companies which have money at their hand, they will continue to do well, and HUL is one of them. Second reason why I have picked this stock is valuations. At around 2100, if it dips to 2100, which I feel it will in August as the market will fall, I believe at 2100 to 2000, very good levels to get into HUL and just sit on it. You can get a good CAGR returns over the next 7 8 years. It will come back into fashion, and consistent you can say 22 to 25% CAGR you can get in this stock up from these levels. It is not elevated levels. The stock has corrected something like 30%. If it goes to 2050 or 2100, the stock would have corrected some 30% from the top, and absolutely no you can say risk in buying such a stock. So that is also a reason why I put this up. So HUL is my first pick. Second in line is Asian Paints, and you see what the stock is doing around 1700, 1720. It went to 1750. It has corrected up in this downturn, in this very difficult situations. Asian Paints has come out with profits. Asian Paints has, where they have had a decline in sales, decline in profitability, that is agreed. But look at the stock movement and look at how the stock behaves, and that tells you a lot of story. So the stock was at 1500, 1550 in March. It should have gone lower with the kind of numbers and the expectation of the numbers, and who would be painting their houses in the retail segments and all. We would be thinking that in April, May, and June, and we saw the results. Probably in till September, it's not going to work out because it is the rainy season, and with no money in the hands of people, and people are more concerned about saving money. Asian Paints might not do even well in this you can say quarter, but still the stock is at 1700. It is not at 1500, it is not at 1600, it is not below 1550, which was the low. And this is what I like about Asian Paints. Rarely it falls in very you can say difficult circumstances, difficult economy, or something like a demonetization or something of that sort. It falls a lot, and that is where I believe that one should get into the stock on any 5 6 7% decline from these levels. 1600 to 1500 would be best levels to get into Asian Paints again. Those who have bought into it, kindly hold it over the next 6 7 years. It can still turn out to be more than a doubler. Easily can go to 4000 4500 in the next 6 years. Declines should be bought into. Of course, maybe it will not go to 4500. That is the most optimistic scenario that I am taking, but over a course of time it will give you handsome profits, and you need not worry about the markets. You need not worry about uh, you can say whatever that will happen with respect to this pandemic or anything. If things normalize even a little bit, this stock will perform very well. And as I said with HUL, it is gaining market share as smaller players will move on the wayside. It will gain further market share. It has a market share of around 40 42%. It will gain it up to 50%. It is said that every second house that is being built is painted with Asian Paints. Now that is tremendous. So you understand that what is the scale of the growth that is expected in Asian Paints once things normalize, probably in 6 months, 8 months time. So this period of August, September, when the market falls, this period when the market may come down to 11 to 10,300, 10,500, I expect that Asian Paints would be one of the stocks to keep an eye on. Asian Paints would be one of the stocks that one should look to get into. Apart from that, I want to say one thing, that I have not picked Nestle in this five stocks. I wanted to say this at the end, but I'll say it here uh, because I have not picked it because I feel the valuations are stretched in Nestle at 17,000, 18,000 levels. So it is not part of this, but others very good consumption stocks with white good stock as well is there. So kindly keep on watching this presentation. All right, so after Asian Paints, let's see what is the third pick in this consumer bouquet that I have for you. The third pick is Titan. So another blue chip, another mega cap, 80,000 crore market cap, has corrected significantly from the highs of 18 1900, went to 850 900. Another stock for which I'm very bullish. I bought this stock at 850, I sold it at 950,000. I had to put money into Reliance, so I did that. but I believe that Titan at 1000 or below 1000, so if it corrects to 900, 950, 850, round about these region between 800 to 950, very good levels to get into. And probably uh, what you need to do is wait for the move to happen. So what will happen is, what is happening at the moment is that because of the pandemic, because of the problems, nobody is going out to buy jewelry, and very few are going out, and that is their biggest business. And currently jewelry is so expensive that people don't want to just rush and buy into it. uh, Loan is not a very big segment for Titan that it is for something like a loan finance companies, like gold loan finance companies like Muthoot, etc. So that is why it is struggling. Probably in the next 2 quarters it will struggle. So for this year, calendar year, they might not do well, and you will have opportunities to get into the stock. So again, next 18 months, 20 months, just keep on buying. Any declines to 850, 900, it is a leading player in the jewelry space. See, it has share in the spectacles and other verticals which it is trying to grow. Uh, as I said, no sales in the April month, no sales in the May month, virtually no sales in half of May, and that has hurt the numbers. So this is the best time to get into such companies, because when numbers really kick in, the stock may just shoot up to 1800, 1900 again. So there's a good 70-80% upside that you can get within months once things normalize, probably in 6 months, 9 months time. There's high institution and promoter holding, and really it will be the front runner once things normalize. So we are looking at autos, we are looking at other segments. Titan will be, and I can stick my neck out that Titan will be perhaps one of the top 3 stocks that will run very quickly to the all-time high, to the 52-week high, once everybody knows that the vaccine is out and things can normalize, probably in a year's time or so. So these 12 months is a very good period to accumulate Titan. You can easily from 950, 900 levels easily get 20-22% CAGR returns, and hold it for the next 7 8 10 years, at least 6 years, but even 7 8 10 years, it would be even beneficial for you. Fourth in line is Whirlpool. Now, this is a kind of a mid cap at around 20-25,000 crore market cap. Uh, Leader in white goods segment. I really like the stock again because of its pedigree, of the way the stock behaves, and the management pedigree. Absolutely no debt, strong management, big in washing machines and small refrigerators, very big in washing machines. They're really good at it. Have corrected reasonably from the top, so it is around 2200, 2400, or even less than that. I think 2100, 2200. I have not checked the price very recently, but it has corrected. And any levels below 2000, closer to 1800, 1900, very good levels to get into something like a Whirlpool. uh, it doesn't correct a lot, that's one thing. Even when results are average, it doesn't correct because of the management pedigree and because of the performance that it has shown over the last 6 years. So the last 20-24 quarters have been absolutely remarkable for Whirlpool. These 2-3 quarters would be difficult. The March quarter, June, probably September as well. Probably December onwards, they'll again bring in the numbers. So what will happen is, over the next 4 or 5 months, you'll get very good opportunities to get into the stock. The stock will keep going down, keep moving in a range, and there'll be volatility. Whenever the market falls big, probably these next 2 months, and the stock falls below 2000, or if it is below 2000, goes down 10-15% from the current levels, just grab this stock. uh, there's a clear sign that the stock could scale 3000, beyond 3000 levels going forward over the next 6 7 years. A CAGR of again 20-22% minimum expected in the stock. My fifth pick is Britannia, and although it has run up a lot, I don't recommend you buying the stock at 3800, 3900. but probably closer to 32 3300 whenever it falls between 3000 to 3300. Very good levels to get into a Britannia. It has already gained market share over its peers. It has already gained market share over the you can say the unorganized sectors. And the best thing about Britannia is that people's habits have changed, and this will remain a strong play going forward. Because of the COVID, people are sitting at home and working, and this is like a work from home kind of a product where people are ordering or buying into biscuits, cakes, and other products of Britannia and having it, like bread, etc., are being used more, and bread segment has done really well for Britannia. So over next 6 8 months, for the next 1 year, the performance will be very good. If there is a dip towards 3500 3600, get into the stock. Any declines after that, you just keep on buying over the next 6 7 years. Again, the stock is set to do a lot. I won't be surprised if the stock would be in 5 digit over the next 6 to 7 years. So this was my video on the consumption sector, and picking at least 4 5 stocks which would be best for this sector, and for you the safest and the best which will give you the best returns. Kindly subscribe to my channel, hit the bell icon. Thanks a lot for watching.